Hello, I'm your host, Effie Pilarino, and today I have the pleasure to reconnect after a while with Sabine VanderLinden. Um, Sabine is well known in the industry. She is one of the big influencers, tech influencers. She's the queen of InsurTech, as they say. And for the audience that doesn't know more details, Sabine is the CEO and co-founder of Alchemy Crew. And Sabine, first of all, welcome. And tell us the other hats that you wear at the same time.
Sure. So yes, I mean, it's a pleasure to be with you, Effie, today. You know, like you, I wear many hats, right? I been in insurance for 25 years, and 7 years ago, I decided to go into the FinTech, mostly InsurTech space, which was very, very new in 2015. I build very well-known acceleration program like Startup Bootcamp Insurtech London and Hartford Insurtech Hub, the accelerator there. So accelerated over 150 startups, helped them raise a lot of money. But in 2020, in June 2020, I decided to set up Alchemy Crew, which is an R&D and commercialization lab. So I work still with large insurance companies to help them industrialize and democratize techniques to help them work more effectively with startups. So my objective is commercialization. So adoption of the technology, implementation of the technology, and satisfying partnership agreements. But over time, I also realized that there is this theme that you know very well in finance called corporate venturing. And so working with corporation, also seeing how we can help them invest better in startups, as well as potentially acquire the most relevant startup within their portfolio. And that's it into what we call the corporate venturing space. And lastly, like you, I love social media. And so I spend quite a lot of time enabling brands to use my brand to actually shout out their voices to a new target segment, which is, in my case, insurance technology, startups and corporations interested in insurance technologies.
Great. I mean, I was just saw one of your recent articles talking about venture capital as a service. I haven't had the time to read it, but I'm really curious what the idea there is. I mean, we could talk about a lot of topics. Embedded insurance, I'm sure, is another big topic that like embedded finance, embedded banking, and so on, is a trend that is very much unstoppable, I would say, because there's all these cultural and business changes around openness that makes this trend really unstoppable. But today I really want to pick your mind, since it's very fresh. You just came back from the big INSURTECH conference. I think it's the biggest, right? ICT 22.
Absolutely. So yes, I come back from Insurtech Connect 2022, which takes place in Las Vegas. 9,500 people definitely attended. We are waiting for the last numbers, but it is the largest insurance technology conference in the world. And what is nice with that conference is that you're meeting friends you have not seen forever, at least for 3 years, and also talk about topics which are relevant for the industry. You mentioned embedded insurance, which comes from embedded finance. So, you know, insurance tend to follow what happened in FinTech. So I wouldn't say I have an easy job, but if I look at what is happening in FinTech, I can actually find stuff which will end up landing in insurance as well. Sustainability, as you know, is a big topic as well. But what you also find is it's about how we disrupt the business model. And so like in finance, we tend to unbundle. So, you know, payment and all the things, we are doing the same in insurance, and then trying to find a way to rebundle while meeting the needs of the customer of the future. And that customer is changing. As you know, we are scratching the surface at the moment of the potential we can deliver and achieve in insurance right now from an innovation viewpoint. But yes, I was at ITC, and my theme this year was commercial sustainability.
Yeah, I mean, to me, it's like, whoa, this topic of commercial sustainability is like a blue ocean. So let's start from the very basic, from the insurer's perspective. What are the core themes around sustainability that are of interest, you know, challenges or opportunities at the same time?
Yeah, so you know, when you look at sustainability in as a topic, it's linked to ESG, right? Environmental, social, and governance structures and criteria. And actually, if you look at Google, you will see that around March 2022, 2.5 trillion searches took place on Google on the word sustainability. So, and that reached really pretty much a 100%, you know, a 100% level, meaning everybody around the world was looking at what that meant and what to do around that. What we find within insurance is you have to look at it from a personal lines viewpoint. So retail, you know, you and I, our home, our car, our travel activities, and a commercial lines perspective, but you can actually break it all across the different business line of insurance, right? Health and so on and so forth. So what you find is the main theme is when you look at personal lines, insurance companies are trying to make more sense around how they keep their customers who are highly sustainability focused. So you and I may actually change where we buy our shoes, for example, right? We want to buy from Nike and Reebok because we know they are recycling their plastic, and then you can bring back your shoes. But that also affects insurance. And what we are seeing in personal lines is a lot of work around carbon accounting and carbon awareness, and even apps enabling insurance to create more educations for people to understand how they can become better in their homes, right? Smart homes, or even how they travel. And that's why we are talking a lot about electric vehicles and hybrid vehicles and all this theme around autonomous driving. When you look at commercial lines, what I find fascinating around commercial lines is we are actually scratching the surface. So the customer of an insurer is in a corporation, and corporations are going through their own transitions, right? They are moving from doing everything with fossil fuel to actually becoming much more renewable. And the way they are looking at it, I think in three ways. Either they need to improve their operation. So think about reducing the travels we are doing by plane. And at ITC, what was fascinating is a lot of the insurers I wanted to welcome and see in ITC could not travel because they needed to fulfill their what they had actually agreed around travels and carbon footprint usage. So a lot of people didn't come from Europe to the US because they made a pledge around the traveling. So that is operational. Then you have product and services, so designing new product and services to fulfill the need of the customer. Mm-hmm. So think about Total, right? Moving from drilling in North Sea to putting solar panels and wind farms. Now we are moving to a new technology, a new set of capabilities, which have their own strengths and weaknesses, new technology. So how do I ensure that, as an example? And then, which requires, therefore, for an insurance company, not only to look at the technology, but also the data from the technology. So a lot of usage of external data sources. One of the sexy one at the moment is satellite imagery. Mm-hmm. But that means also new ways around pricing and underwriting and doing it more real time and using more transparently. So that fits into the second part, and also looking at the business model in insurance. So a lot of thinking around how do we build circular business models. And so what you find is you have these two prompts where you need to think about the consumer and you need to think about the customer and how they can become sustainable in the long term. What we've seen, we scout a lot of startups every year. There is around 14,000 sustainability tech out there, which have raised about 370 billion over the years. And what you find is that there's a lot of tech that we can use. A lot of them are not insurance technology platforms, so it's a great place to be. But we are still very, very early in the process of understanding how to leverage ESG. And social and governance structures are still very low, as you would know.
Very low, yeah. That is clear. We see it everywhere. But when you talk about these tech startups that are providing, different technologies that can support the insurers and the whole value chain, is there here a big overlap with what we call climate tech companies? And those are, you could see them as part of the insurtech ecosystem, but they're not purely insurtech.
Absolutely. So what I found amazing with the industry we serve is, insurance touches everything. And so I do look at insurance technology startup, but I do look at non-insurance technology startup, as you said, climate tech startups. And what you find is a lot of the technology coming from those climate tech, they start with, weather forecasting, finding out, how to prevent wildfires, how to predict whether there's going to be a storm or a hurricane. And so a lot of those startups are not insurance technology startups, they are climate tech startups. They're using satellite imagery to actually provide better predictions around, of homes, elevations, flooding issues. And they are not seeking insurance technology. They're actually serving the world of flooding, or they are serving the world of climate and weather related issues.
Or they are serving agriculture, like farmers, right?
Correct. Farming, absolutely. And so we have to go and look in those different buckets of technology providers to see whether there are gems which can fulfill the need of the insurer. So an insurer will look at those startups and how can you help me risk mitigate, risk manage, prevent risk, and make sure that I can pay claims faster. So there's one big part which will be, which are the ventures which can help me from a data viewpoint, an underwriting and pricing viewpoint. So that is going to be that front, the predictions around how we use the data to become better at pricing so that we can avoid claims. And then, which one can help me prevent the claims, prevent the fraud, and also reduce the help me reduce the time it takes to pay the claims. So you will find business models such as parametrics. So I think parametric insurance is going to become more and more prevalent, because if you have the parameters, it's like having a prepaid card, right? If you have the parameters, you don't need a claims department to pay the claims.
Yeah. I mean, in my mind, Sabine, and I'm not an insurance person, but it seems to me that the insurance sector is going through the big transformation of realizing that they're not just selling a product that's called insurance, and then they have, this big menu, as you said, with the car insurance, health insurance, and so on, but they're really in risk management business, risk of our lives, whether we are individuals or businesses, and that can only be done efficiently in an intelligent network with partners, right? So it's like here again we see this partnership approach, an ecosystem approach where everybody has to become smart to unlock this value, right? Because you need to enable your, the companies that you're insuring, for example, to be smart so you can price better your insurance.
Absolutely.
Yeah. How is that working? How is that evolving? Are insurers data enablers for their clients? Is it kind of a two-way street? Has this started? Are there examples there?
Yeah, so it's an interesting question, because if you think about insurance, there's probably 5,000 insurers globally, from the big ones we know, and including the smaller ones, tier 1 to tier 2, 3, 4. So, when you look at insurance, it's not just about the big guys, even though we tend to hear about the big guys more often. Now, when you look at innovation, I tend to be really critical because, you know, probably you have the top 200 companies doing really something around innovation. And so it's a little, you know, it's a small segment within this big portfolio I mentioned. And so you actually starting seeing the top players, yes, doing things with data, because as you know, data is the oil of any sectors now. And in insurance, a lot of the underwriting predictions are made on historical data. However, to become much more accurate and to retain the customer of the future, a lot of insurers realize they have to integrate external data sources, the weather-related data, you know, the wildfire, the hurricane, the flooding data, to actually being able to provide a price which is accurate. So if you have a home near a floodplain, your premium may probably be higher based on the prediction of likelihood of flooding, vis-a-vis somebody which is in Midwest, you know, or in central, you know, in the middle of a country, which is less like, and on an elevation, which is less likely to actually be affected by flooding. So imagine if you have all this data, even the elevation of a building, you know, whether the building is having, you know, very expensive paintings and all those things, that can come into the criteria of underwriting. And then you can provide a more accurate and a better price, or a better price by providing education around the things people should do to actually prevent claims or reduce the likelihood of high claims. So big, you know, think about the big hurricanes which taken place in the US. Some hurricanes have been, you know, highlighting days before they occurred, right? Because technology allows you to predict that something is going to happen. But what you often find is consumers don't even always think that they should move their cars. Imagine you have an asset, which is a car, and your insurer says, hurricane coming, you may want to move your car, maybe get them into a very safe garage, right? Now you are starting reducing the likelihood of the claim. And so I think what you find, more and more insurers are looking at becoming better risk prevention experts by using the data to allow them to either underwrite at better prices or to prevent things to happen.
Okay, that's very, very interesting. So messaging, I guess, then customer and prompting them behavioral changes, basically, right?
Absolutely.
Because I guess people, you know, for some reason don't think of it, or think, okay, I have insurance, and you know, this is not my job. Very, very interesting. Very interesting observation. I'd never thought of that. Sabine,
one example I wanted to share with you, think about Brazil. There's one lovely startup where I've been working with, which is able to predict the likelihood of a storm 52 weeks before the storm occurred. Wow. Imagine, right? And as you know, during the summer, there were a lot of storms in LATAM and in Brazil, and they were able to work with, you know, an insurance team to look at, okay, how do we enable our customer to know things is going to happen, and so that they can protect their asset, maybe, you know, close the shutter if you have, you know, houses with big bay windows, you know, tropical and sunny places usually have big bay windows, so you can actually use a shutter to actually avoid broken windows, or move your car if you're used to having your car outside, to move it into a garage. And being able to do that prediction, the whole project was, how can we predict and prevent and therefore reduce the likelihood of claims by using the platform. And you will see a lot of insurers investing and evaluating technology to help them be better partners to their customers.
Very, very interesting. It's like we don't think of insurers as our friends, so to speak, right? We dread any communication with them. And here it seems that this would develop a very different relationship, this prevention relationship, and of course increased engagement.
Absolutely. 100%. And so it's how do you become a partner, right? And you will see company like AXA saying we want to be the partner of a customer. When you hear the word partner is, being more equal. So, it's not about selling a policy at the beginning of the year and then expecting there is no claims and not talk to anybody or only talk to people when there's claims. Now, a lot of insurance companies are trying to drive this engagement, but to have an engagement, you need to provide value, right? It's about transparency, it's about delivering trust and trying to develop a relationship. And so that requires for sure digital technology, but also about understanding the other person wants and needs, which is a very different way of thinking about insurance, right? And some type of insurers are trying to do that, definitely trying to do that.
Very, very interesting. Is there any progress in terms of connectivity between insurers and their asset management arms? Because a lot of the big insurance have significant asset management arms. And there, are we seeing them setting up, I would say, ESG investments and leveraging their data and insights from especially the environmental part for that? Is there communication or not really? Not yet.
So I would say it's an interesting question because from a communication viewpoint, I think still the insurance company tend to be quite siloed. I don't know whether it is silo because of regulation, right? Chinese walls, because you are seeing the business model insurance changing. For example, some of the departments I'm working with are trying to create better connection amongst different part of the organization. Like imagine people doing transformation innovation, trying to connect more with people dealing with M&A. So imagine if they find an interesting startup, said, M&A, maybe you should look into that. Or what I call corporate venturing, right? Which is a corporate venturing capital fund of the corporate. So you will see quite a number of insurers. We've just done a piece of work around the CVC world. We analyzed about 600 CVCs and there are around 28 insurance CVCs out there. Still small, right? So, how do you have the innovation team connect with the corporate venturing team, connect with the M&A team, and then you're asking me about asset management? So I don't think there is that connect because it's not obvious. However, when you look at the asset management part of the business run by CEOs, you will see that yes, a number of insurers have realized that investing in ESG can deliver higher returns than investing in normal companies. So you will have, imagine Aviva as an impact fund in France. So you have a Generali as well doing work on ESG. So you'll find a number of insurers having within their asset management arm a lens around from I would say, pension fund viewpoint, right? Having a lens around the ESG platforms and investment because it's seen now as delivering higher value than normal investment. So you will see it, but I wouldn't say it's that connected because first, I think there is part of which is Chinese walls, right? A little bit like the consulting firms, the accounting versus the consulting arm. But also, I think it's a very different business and the motivation are different. However, where there's a connect is imagine we are working with startups, which could be great investable asset, growing assets. So providing awareness whether when they actually go into IPOs or whatever, where they could actually become good investment options from an asset management viewpoint. That's where you will see probably a connect between the two parts of the business.
So tell us a little bit more about, you hosted a big event at ICT. What were the sort of takeaways from that event and give us a little bit of color, who was participating there and really the main takeaways?
So yes, a big theme we wanted to cover at the conference this year, Insurtech Connect, was around commercial sustainability. And so, organizing those events takes time. We wanted to create a private event which allows startups to connect with investors, to connect with insurers, reinsurers, with peers who actually had strong interest in the topic. So who attended? so first, the way we organize the discussion, it was 3 hours discussion, is we had 3 main topics we wanted to address: data analysis and ethics. So that was led by one of my market colleague, Lisa Wardlow, who actually is an expert around data, former CFO of a large reinsurance company. And so she was able to help the audience really understand how we use data, and actually we think about ethics when we start using data in various forms, because one big part of ESG would be looking at how we deploy ethical AI to make sure that we do not eliminate specific segment of the population from an insurance viewpoint. So think about the protection gap. We have a 1.1 trillion USD of protection gap, according to Swiss Re. And so more and more insurance companies are going to look at
Sorry, Sabine, what is the protection gap?
So it's people like you and I unable to insure themselves. So imagine smaller segment which are discriminated because the rates are too high for them.
Okay.
So it's where you have people protecting themselves, but actually not enough people are protecting themselves to actually make sure that we are all insured in a proper way. And that protection gap affects, houses in flooding areas. Some people with houses on floodplains cannot find insurance. So that would be part of the protection gap.
Okay.
And it is a massive number.
What's the number again?
1 trillion USD of estimated protection gap. And I think this number is going to increase, right? Some people say it's 1.5. It's a number.
And this includes health, home, everything insurance,
Absolutely.
right?
Exactly. Think about the insurance market is around a $5 trillion revenue generating GWP. So one, it means like 1/6. It's the additional trillion can come from that protection gap.
And these are global numbers, looking globally
Yes.
at who's uninsured, health and home, basically. Absolutely. The two big ones.
Yeah, and Swiss Re, through the Swiss Re Institute, are very renowned for the analysis and the research and prediction they're putting together. So they've done lengthy evaluation of the current protection gap, and I think there is a paper called Protection Gap from Swiss Re, which start highlighting areas where we need to be more mindful that people need insurance.
Yeah, sorry for the interruption. So
it's a great question. It's a great question. And so you have these things around data and ethics. Then we wanted to address underwriting. So responsible underwriting. How do you do responsible in the right way? So we had a set of ventures as well and startups talking about this. And then the last pod or work stream was around disruptive business model, which I led. And we looked at how the insurance business model is evolving. So for example, I had startup with marketplaces and talking about parametrics and very heavy data-driven business models as well, sharing the way they are disrupting commercial lines today. So we had in each of those different work streams 3 startups, which are expert in what they do, from flooding to wildfire to every data provider, using IoT devices to provide the data around buildings, to as I said, startups building marketplaces and using digitization to provide the information more transparently so that people can get access to capital and get access to new ways of insuring product and services. One thing which came out of our discussion is, when we think about insurance tend to insure buildings. So when you think it's about physical risk, whether it's your computer or your house or your car, it's a physical risk. Or liability, which is, I fall down the street, that is liability. What is happening is now with the digital world we are living in, so I mentioned the solar panels and then wind farms. We are now moving to digital risk, think about cybersecurity. And so a lot of the conversation was, how is the business model of insurance moving from just physical asset to hybrid asset, and then what we call digital asset, which are your brand, which are, you communicating through digital devices and therefore having a risk of cybersecurity or cloud outage. Imagine you're working and your business is dependent on the internet. Think about the florist on Valentine's Day. Internet stop. no money on the 14th. So, you know, you can see the risk we are dealing with is changing. And so...
By the way, to interrupt you again, Sabine, I was reading today that they're forecasting blackouts in Europe in the winter for the telecommunications. So imagine, you know, that's a dual, a storm, if you want, if that happens for any business, right?
Correct. And, you know, often the traditional insurer do not insure based on those big events. They, you know, so that, for example, this is a new insurance type. A great startup called Parametric actually do this cloud outage. So they are insured based on an event, which is, you know, Google, Amazon, this, you know, having a problem where you could not work for 5 hours, which has happened this year or last year, right? So that things which can happen. But then when you look at it from a business owner, that could be life or death, right? When it is a major, think about Christmas or, as I said, Halloween or those big events, right? And so you have to look at how you start insuring the consumer in a way that needs to be insured for today. So a lot of conversations were around some of the future risk, thinking about what we have today, what is missing. So that external data sources, which need to augment the internal data sources. And what we've done through our conversation is gather a rich set of insight, which we want to write an article or mini report based on what we've learned from the event. We had, you know, a lot of insurers, investors during the event, and we also had this special title. We had tech provocateurs. We had around 12 tech provocateurs. We were like all around the room. And if people didn't ask questions, they would be there to actually start, you know, launching into the conversation. So the whole event was very interactive, very active. Everybody participated. Imagine 3 hours of conversation nonstop. There were even people standing up in the back trying to find a seat in the session. So we were over, you know,
full house plus overflooded.
Exactly.
Overflooded, right?
Overflooded, exactly. And I think some of the things which I think is important is, I mean, 3 stats I think you will find interesting. So today, the climate risk is valued at almost $1 trillion USD to the world's biggest companies, only the world's biggest companies. So the risk of climate risk is $1 trillion. And this is expecting to happen within the next 5 years. Every companies which are dependent on supply chain, you know, the chips that we could not have in our little computers in recent months. So supply chain risk costs $182 million so far. That is the average annual cost for supply chain disruption for each organization dependent on supply chain. And only 11% of companies are monitoring their supply chain risk, 11% only. So using data to actually understand where they may actually not have assets where it needs to be selling the product to the customer. And the last statistic is around flooding. By 2045, the world's urban population will increase by 1.5 times. So we'll be 6 trillion people. And 20% of us will be living in coastal cities. That represent 4.5 trillion USD of asset at risk of flooding.
And talk about in ESG, I think the social part will become important because we will have migration of these, you know, populations and dense populations, right? Because there's cities, you know, coastal cities and so on, and they'll be moving.
Absolutely.
These numbers are staggering. I mean, this is an eye-opener to me to think of the fact that risk is being redefined. It's changing completely.
Absolutely.
But really in structural ways. It's not like we're just adding another physical item. You know, I have a car, okay, I have it insured, and now I have, let's say, a drone or something, you know, another object. Okay, that's not a big thing, but it's changing in nature. is what you're telling us, and not in sort of some futuristic way, in a very real way.
Absolutely. Absolutely. I mean, I know we are talking about, some major, areas such as, personal lines, and in commercial, I'm really excited about the opportunity in commercial lines, because imagine you can do algorithmic underwriting. So, using the AI to allow for automatic underwriting for risk, which are pretty much parameter driven. And then after that, you apply parametrics, which mean you don't have a claim department. If a drought happens, or if you have a hurricane, or if you have a specific type of risk based on specific parameters, you just pay. You don't need to have a claims department going through the process of evaluating. So the risk management process is changing, and the way clients are being fulfilled, technology is still a massive enabler to allow, in some ways, for sure, for cost efficiency. But at the end of the day, everybody is looking for that top line, right? To actually drive growth opportunities by serving the customer differently. So insurers are all trying to remain relevant for their clients. And relevancy means looking at the business model in very different ways. Absolutely. So, some people think insurance is boring. Actually, I think it's pretty cool.
Well, I was actually going to say that, it's like, oh yeah, I think of insurance as boring, but now you've got me started. I need to look at the insurtechs and maybe move away from the big insurers and see if I can get better service or more suitable service for my profile, my needs.
Absolutely.
Yeah.
And a lot of them are aiming to do that. I mean, don't forget that insurance companies, startups still need capacity. And so what would be the business model of insurance in the future, right? If you look at an insurance company operationally, you have for sure an insight marketing. I mentioned all the data. So there's a part which is really understanding the data to enable proper underwriting and pricing. But then when you look at the operator, you have a manufacturing part, which is, how do I manufacture new products and services which are relevant for the customer? How distributed? Do I do direct, or do I go through different distribution channels? So yeah, also evolution of the business model of insurance. So we have this mechanism called MGA, Managing General Agencies, which takes more of the insurance carrier profile through a brand, right? Usually an MGA will have a sexy brand, much more customer digitally focused, but they are going to be dependent potentially on an insurer for capacity. So what you find is maybe there's going to be an unbundling of insurance operation model, where some will be data provider and selling data, some will be manufacturing new product and services, and some will just focus on providing capacity to the kid in the block, if you don't mind me saying. And so for you to be accessing a new brand, you can access it new brands, but still behind the scene, who is taking the liability will be the insurance company.
Very interesting. Very interesting. Well, Sabine, thank you so much for this very insightful. I learned a lot, and that is my joy. And I learned from you, which is wonderful. Tell us a bit where our audience can follow you, and where you create content, and where are your touch points.
Sure. Thank you for the question. So you can definitely find me on LinkedIn, and I have the name Sabine VanderLinden. So you just need to look at Sabine VanderLinden and you will find me in one word. I also am on Twitter. So for me, Twitter is about curated content. It's about the thought of the week, and it's also looking at very big problems that I like to talk about, which are future of work, commercial sustainability. I would talk about cloud computing. So there are a few topics and AI that I follow and I try to talk about. Then I also I'm dabbling with TikTok and Instagram, but it's very early stage. As you would know, you have to try to actually understand how the algorithm works. So you'll find me on TikTok and also on Instagram under Sabine VDL Official. And what I'm trying to do with those channels is really promote my podcast, which is Scouting for Growth, where you have actually you appearing as well, Effie.
Yeah.
And the podcast is around corporate venturing, you know, trying to demystify how startup corporate investors are working together. What are the themes, which are the most interesting one in insurance as well, which are the startups are doing very well. So at the moment is creating a lens around corporate venturing, enabling the startup we're trying to raise to understand what investors are looking for, and then corporations trying to go into that corporate venturing space to understand how investors are looking at it as well. So trying to connect that network and make it much more approachable within the insurance space.
Thank you very much, Sabine. And I will definitely add links in the description of the video. And again, it was a pleasure talking to you. And thank you for bringing us this fresh air from Las Vegas.
Thank you. Thank you for having me, Effie.